So we may be moving towards an end of that U.S. government shutdown. Let's get a feel as to where markets are headed towards year end. We're joined by Jamie Marty, president of Marty Wealth Group. Jamie, great to see you. Thanks for joining us.
Thanks for having me.
Just looking back, I mean, we're well through earnings season now. What themes have emerged for you?
Yeah, certainly we've seen a continuation of many of the themes we've seen over the last 2-3 years, which is consumers, particularly on the low to middle income level, are still struggling. Some of the changes that the Trump administration has brought in terms of restarting student loan payments is definitely taking an effect. We're seeing the low income lenders have pretty poor earnings this earnings season, and share prices are tumbling. And also it's spilling right across the general economy into, fast casual restaurants. Housing is weakening as well, and we're seeing lots of damage in those stocks. And so it's really just a continuation of what we've seen in terms of that struggle for the low end and middle class consumer. And then on the flip side, we're seeing the AI trade just continue. Results out of companies like the Mag 7, the Amazons and Googles, taking those stocks to new high. And we're seeing those tech stocks rally again this morning.
Yeah, it's interesting that the hangover from COVID has lasted so long. Inflated spending back then, and consumers overburdening themselves, for example, or taking on too much debt.
Yeah, exactly. It's a lot of it is really just the stimulus and the hiring that we saw back in 2020, 2021, and even into 2022. It's still just being unwound. So companies aren't really hiring right now. We're seeing a very weak labor market, at least in terms of new hires. And that's just, I think companies have realized they had, too many employees. They overhired, and now they're just working that off. And we're seeing in some cases large scale layoffs, like we've seen at Amazon recently. I think laying off over 10,000 people. And then, just other pressures in terms of efficiencies from AI and new software and technology services. It's just led to, and then the tariffs on top of this too, just putting in that uncertainty. And we're seeing the job market stuck, which doesn't do anything for consumer confidence.
The President Trump, south of the border, he's floated an idea again of paying checks to Americans as their share of the tariff revenue. He's talking about apparently $2,000 US, but he would need congressional approval.
Yeah, so we floated this out yesterday, and there's no details on, and they've walked it back a little bit in terms of, is it going to be a check? Is it going to be tax cuts? Is it going to be some other way of funneling this money into the economy? But I think this is maybe this is a reason why we're seeing gold rally this morning, is this is a little bit of in terms of getting the deficit down and controlling debt levels. Giving away money is the opposite of that. And so I think some of the more budget hawks are going to look at this and say this is just more of the same. It's not going to do anything for inflation in the medium to long term, but certainly it can juice the markets in the short term, particularly as consumers have a little more money in their pockets.
What's your feeling about the AI trade right now? Are you wary of it, Jamie?
No, I mean, I think we're still pretty bullish on it long term. We definitely like a pocket of the Mag 7 companies. We like Google, we like Amazon, Microsoft, Meta. Despite some of the CapEx plans they have, we still think has a good long term. And then even on the chip side, we like Broadcom, Qualcomm, NVIDIA. So really staying with those core companies. And we think this is a good entry point to get back into this trade. We've seen some of the air come out of this, particularly on the very speculative stuff. So if you're talking about quantum computing or some of the satellite space companies, they've all pulled back, in some cases 20 to 30%. On the crypto side, we've seen Coinbase stock down 25% in the last month. And then Circle, another big crypto IPO in the stablecoin market. I mean, that stock peaked, I think, around 270, 280, 290 in the early summer, and it's down below 100 right now. So there's been a lot of the air get let out in some of these more speculative names, but meanwhile, that underlying demand for AI and inference services is continuing to grow. And I think NVIDIA is asking TSMC, its a big chip maker, to increase capacity for its latest generation of chips. So we're we're still seeing lots of demand for the build out of AI, and we think there's lots more use cases to come for it.
You have a couple of stock ideas for us. Start off with Chemtrade. They sell a variety of chemicals, including substances used in water treatment.
Yeah, Chemtrade is a topical one. They're going to report their earnings tomorrow night. And this is a stock that was hitting a 52-week high just on Friday. And they sell, you're right, a variety of chemicals, specialty chemicals. But what we really like about Chemtrade is they're growing their water treatment business in the United States. So this is a very large market. Obviously, every municipality, every food producer needs to have clean, treated water, both on the input side and cleaning up the used wastewater. And so this is where they've really been focusing their efforts. And they've just recently completed an acquisition in this space, or they're in the process of nailing one down. It's their first large acquisition in, since over 5 years, I think. And really, this is a company that trades at 5 times EBITDA. They're paying a nice dividend of 5%. The free cash flow that they're generating, they're using to buy back stock. And then they're growing the earnings on top of that. So it's just a company that at this valuation level, it's very accretive for them to pay those dividends and buy back stock. And then you get the earnings growth on top of that. So we think this is a company that could generate a 15% annual return for the next 3 to 4 years.
And also Aritzia. It's odd. My screen is showing that the estimate is that they'll report their next earnings on New Year's Eve. It sounds like a funny time to report earnings, but in any case, you do like the look of Aritzia shares, and they've gone up almost 80% this year.
Yeah, so I mean, we've been long-term bulls on Aritzia, and it's had a phenomenal year. And I think they will report earnings in early January. Their earnings calendar is a little bit different than most, but probably not New Year's Day. I hope not for
or New Year's Eve.
Sakes.
Yeah,
New Year's Eve. Okay, yeah, even better. But no, Aritzia has had a phenomenal run. But what we are getting more excited about is we can track some real-time data indicators for demand. And if you look at something like Google Trends, you can look at that in Canada, and you can look at that in the US, even down to state levels. And we're seeing, those number of searches for Aritzia continue to accelerate well over 50% year over year. And then on Bloomberg, you can get some credit card data that tracks credit card spending in the United States at Aritzia. The average analyst has Aritzia's US revenue growing 30% in this quarter. And right now, those measures are tracking closer to 50%. Now, it's not a perfect correlation, and it doesn't mean that Aritzia's U.S. revenue is going to grow 50%, but it certainly is. Those are two healthy indicators that they're likely to exceed their next quarter's earnings when they report, whenever that is in around the new year.
Okay, yeah, I'll try and check with them when they do hope to report. Jamie, thank you very much indeed. Jamie Murray kicking off the show for us there. He is president of the Murray Wealth Group.